I think inflation will decline towards the end of this year. We're certainly seeing prices of commodities trending lower, but take it with a grain of salt.
We have to reduce our gas consumption. I know this is a big ask for the whole of the European Union, but it is necessary to protect us.
The President is committed to taking aggressive action to tackle climate change and made clear if the Senate won't act, he will.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome, and here's what's coming up on today's program. Well, Italian government in chaos. The Prime Minister Mario Draghi tells lawmakers he'll meet with the president where he's expected to offer his resignation. Hike, but by how much? The ECB is set to raise rates for the first time in a decade. The question, 25 or 50 basis points. Plus, turning on the taps, the Nord Stream says gas shipments from Russia have restarted. Prices tumble. Now, first thing is first, let's check in on the markets. And I have to say there's a bit of a market wobble, not only because of Italian politics, but also as we await that ECB decision. Again, with Mario Draghi gone, likely we'll see elections in October. At the moment, what we're hearing is it could be October 2nd or October 9th, that election. Remember, we have not voted in the fall in Italy since 1919. What that means is that we could have a coalition in place that is unreadable at the moment, and it's definitely putting a lot of pressure on some of these Italian assets. The FTSE MIB Italy down some 2%. Euro holding for the moment at 101.94, but things could change. And then if you look at a map of Europe, it's very clear that it's really Italian assets that are hurting most other ones. Now, Italian Prime Minister Mario Draghi is the man of the hour. We thought he would resign in the lower house, but instead he's decided to go to the President Mattarella, and that's after he failed to revive a broad-based coalition unified behind his premiership. Now, in the last hour, Draghi suspended a session in the lower house of parliament, saying he would first state his intentions to the President Sergio Mattarella. Of course, we'll continue our coverage of the story as it unfolds throughout the day here in Rome. But in the meantime, the biggest story is, of course, the ECB. The central bank will raise rates for the first time in 11 years. A question whether they hike by 25 or 50 basis points, with money markets betting even odds of either. Now, the ECB also set to unveil a new anti-fragmentation tool to prevent peripheral bond yields, now such as those in Italy, from spiking. Danny Berger joins us now from Frankfurt. She's on the ground. Danny, 25 or 50 basis points. So this goes to the credibility of what the ECB does.
It does, because they've guided 25 basis points so explicitly. You talked to Christine Lagarde only a month ago. She said that. She's put it in writing. They've said it over and over again. So if they move 50 basis points, do they risk losing the credibility of forward guidance? Now, there's an argument to be made that in prior ECB times, you wouldn't have that explicit forward guidance. Perhaps it's just a return to the orthodoxy, so it might not be a bad thing. But they are using guidance as a tool, so they might lose that issue. And at the same time, a lot of folks think that, hey, 50 basis points, it would just get us back to neutral. If inflation's at 8.6%, neutral is still accommodative given that inflation rate. So perhaps the time is now to go at it with jumbo hikes.
Danny, thank you so much. We'll have plenty more, of course, from our Bloomberg anchor, Danny Berger. We'll also have special coverage of the ECB rate decision and reaction to it. That begins at 1:15 p.m. London time. Don't forget, because the timing has changed, so something we're not used to. It's 2:15 Central European time right here on Bloomberg. So we're now joined by Anna Stupniewska, global macroeconomist at Fidelity International. Anna, 25 basis points, is that your base case for the ECB? And is there, as Danny was suggesting, a credibility problem if the ECB does more?
We think 25 is probably more likely, although, of course, they have been pushed and pressurized to do more, given inflation pressures and what the Fed is doing in a very aggressive way. But I think you're right. Credibility is so key, and credibility of forward guidance has to be preserved. Also, what they have on their side, in a way, is that inflation expectations do remain under control. There is no evidence of wage wage price spiral just yet. Inflation is mainly driven by energy and food components. So in this sense, they can afford not to go out and hike for 50 basis points. At the same time, the window of opportunity is closing for them, and we think it's only July and September, the two meetings that they will be able to raise rates before they have to stop, given the damage to the economy.
Yeah, so Anna, I don't really understand the market positioning. Are you worried that 50% of the market expects 25 and the other 50% expects a 50 basis points increase? Does it kind of show the anxiousness out there on the markets?
Of course, there is a lot of uncertainty, Francine. As you know, it's really a toxic mix of factors for the ECB to try to combat the factors that are outside of their control: gas flows, aggressive Fed tightening, and of course the Italian political situation. I think the market is clearly struggling with that uncertainty as well.
So Anna, what does it mean? Where do you want to be overall as an economist? Do you worry that this impacts the disbursements, if I can get my words out, the money that they will get from the EU? What are you expecting in Italy?
Well, I think, clearly it's very tricky and complicates the job of the ECB. It complicates that fiscal stimulus, of course, as you say, disbursement. But I think for sure it undermines that unity for Europe, and that's what Europe needs today to go through this the main crisis, of course, the gas crisis related to the war in Ukraine, and Europe has to reach that consensus on area-wide fiscal support. So we don't think that government support, national support, will help avoid recession or cushion that recession. We need that area-wide fiscal support, and of course the Italian political situation is complicating things.
Anna, what does it mean for overall this fragmentation tool that we could get from the ECB? Does it need to be a deterrent, or do you worry that actually to reach the fragmentation tool, the bar will be so high that it'll be very unlikely that it will give countries like Italy any support?
Well, that's exactly what the focus is now, how credible, what the conditionality is. Again, given the situation in Italy, unfortunately, the ECB might have to use that tool earlier rather than later. But at the same time, I think they will try to communicate that they are not going to close the spreads because of that political risk. And I think the tolerance for that, for higher spreads is higher now from the ECB side, given this political uncertainty. So they want, obviously, to make sure that transmission mechanism remains in place, but not necessarily to close the spread because of that political risk premium.
Anna, thanks so much. Anna Stupnicka, they're global macroeconomist at Fidelity International, joining us this morning. We'll have plenty more live here from Rome. We'll bring you the latest on the political turmoil after the collapse of Mario Draghi's coalition. This is Bloomberg. Breaking news out of Rome. In the last couple of minutes, the president, of course, or the prime minister has said that he will resign. This is according to a presidency statement. Mario Draghi has resigned. Now, we were expecting this. We were actually expecting him to go to the lower house this morning and resign and then speak to the president of the Republic, Mr. Mattarella. He did not do that. He said he'd go straight to Mattarella and then we would hear from him. The impact on markets has been pretty brutal, if I'm honest. Italian assets have been sold off. You can see the FTSE MIB over in Italy down some 2.4%. This is of the uncertainty. Investors are worried about what comes after Mario Draghi. Again, he was a technocratic government. He reassured investors because of his politics, because of reforms under him. It was pretty convenient or pretty clear that they would access the EU funds that the EU would disperse in December. It could have also helped with the ECB fragmentation tool. Now with him gone, although he could stay on as caretaker until the elections, we go into the unknown. Well, joining us now is an entrepreneur, a business leader, Angelica Donati, chair of the Italian construction lobby group ANCE, Giovanni Donati. Thank you so much, Angelica, for always coming on to give us a business perspective, because I imagine there's a lot of anxiousness out here. We focus so much on the markets, but if you're a business leader now, you don't know who comes next.
Well, I mean, businesses have been very clear that we believe, all of the Italian business community believes that Mario Draghi was the right person for the role. We said it when he was nominated. We thought, I mean, it was the biggest piece of luck Italy had, right? One of the most prominent world leaders was our leader. He was a man, or he is a man, that gave credibility to Italy globally, both from an economic perspective and also from a political leadership perspective. He is the leader in Europe, the prominent leader in Europe. And so losing him at such a crucial moment, there's a series of very fundamental, essential reforms that need to be implemented now, before the end of the year, for the PNRR, the NRPP, to be put in place properly.
And this, Angelica, is a recovery fund money.
Yeah.
What happens if we don't access this money?
What happens if we don't access this money is that Italy's last big hope flies out the window for no good reason, really. I mean, Italy is the biggest beneficiary of the PNRR. It's almost 200 billion euros of money to be spent, but not just that, the reforms that are being put in place, which we hope will continue to be implemented, because as you rightly said, he should stay on as caretaker. We hope that there will be a clean transition into whatever the next government is, and we
Who
hope.
do you think the next government is?
I have no idea. I honestly have no idea. I think there's a lot of checks and balances that need to be worked out now. There's a lot of dissent and a lot of angst around what happened. So whoever the next government is led by, whatever the next coalition is, because I would imagine it's a coalition, I would hope, as a business person, that they would take a leaf out of Mario Draghi's book and plan for the long term and put in place reforms that actually help the country. So Draghi's credibility brought us into kind of a new pace, and we hope that that pace remains.
But Angelica, I mean, if anybody has any sense, why would they go back on some of the good work that he's done?
Well, it's not a question of going back on the good work that he's done. It's that what he's done is start a process that needs to be implemented in a very rigorous and fast manner. And if it stops, then we miss our deadlines. So we have very, very strict deadlines in terms of public tenders, in terms of public tender law reform, fiscal reform, competition reform. All these things need to happen now, and if we lose too much time, then the ship has sailed and it won't come back.
So specifically, what does it mean for the construction?
So for the construction sector, the biggest, well, there's two big milestones for us. The public tender law reform, which needs to happen after the summer, and also all the big PNRR, so recovery fund tenders, which need to be tendered and assigned before the end of the year. And we're already behind schedule. We're behind schedule because due to the war in Ukraine, due to the crazy market shock on raw materials prices, we've had to readjust all our prices. The DLE aiuti, which was approved last week, which was also kind of what started this whole mess, was put in place in order to allow, amongst other things, allow the public sector, the public construction sector to work on PNRR projects. And now,
do you worry that basically Italy becomes uninvestable in,
well, I mean,
in 6 months?
The markets have been telling us that, because if you look at the Italian BTP spread over the bond, we're at the same level as Greece again. Piazza Affari, the Italian stock exchange, has crashed this morning.
The spread wasn't as bad as it used to be.
No,
right?
But I mean, the markets are worried, and if markets are worried, we're worried. Obviously, Italy is a country with massive opportunities. We've got a very strong entrepreneurial category, and I do believe that we've weathered other crises before. We'll weather this one, but obviously, it would have been better off if this never happened in the first place.
What kind of assurances do you need from the next prime minister or from the next coalition to make your job easier?
Long-term planning, long-term strategic planning. So one of our biggest weaknesses, I think, is that as a country, we've been very short-termist in our approach, and we need to be able to plan for the long term. We need to start thinking in the way Mario Draghi has been thinking, which is let's look at the next 10, 20, 30, 40 years, and that's what needs to be done in the long term for Italy.
Do you worry about the level of the euro, and does that impact, for example, your business?
Well, not so much for the construction sector in terms of the fact that we work.
It's local.
Yeah, it's local. So a weaker euro could be a problem if we're importing goods from outside the European Union. So that's definitely the case. On the other hand, Italy is a net exporter, so a weaker euro for an exporting country is actually not necessarily a bad thing.
Now we go back to the devaluation of the 90s. No, I'm kidding. Angelica,
No,
thank you so much.
Thank you so much,
As
Francine.
always, Angelica
Thank you.
Donati, their chair of the Italian Construction Lobby Group, Anche Giovanni. Now, coming up, it's decision day in Frankfurt as the ECB gears up for its first hike in 11 years. Will we see a 25 or 50 basis point hike? Well, we also look out for the anti-fragmentation tool. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now, on to the ECB. For the first time in a decade, the central bank will raise rates. The question, whether they hike by 25 or 50 basis points. Let's get straight to our lead anchor covering this, and it's Danny Berger, who joins us with a guest from Frankfurt. So, Danny, over to you.
Hi, Francine. Thanks so much. Yeah, a lot of questions surrounding today. Really happy to say that with me today is Esther Reichelt, FX strategist at Commerzbank, to try to sort through some of the chaos. Esther, thanks so much for joining. Well, we have to start perhaps the political chaos, considering just the breaking news. Draghi finally stepping down, saying he will be resigning. What sort of impact, or is this impactful for the markets you watch?
Yes, absolutely. I guess this is quite negative for the euro, in particular ahead of the ECB, because it really puts the spotlight on the ECB. We have this discussion, 25 or 50 basis points, if they don't deliver 50 now, it looks as if they are bowing to the whole Italy chaos. And of course, it also puts the focus on this new transmission or anti-fragmentation tool they are most likely going to discuss today.
Yeah, I mean, a lot to dig through there, but what does it mean in terms of actually being able to put to use an anti-fragmentation tool if spreads are widening because of politics in Italy?
Yeah, that's really bad timing for the ECB, because there's always this danger that they are leaving their mandate, they're only allowed to act within their mandate. And if they are now implementing an anti-fragmentation tool, that would look as if they are helping out Italy in this political chaos. And in the end, it is fundamentally justified that spreads are widening if there's this high political uncertainty in Italy.
But if I'm a trader today, what am I trading on? Am I trading on 25 or 50 or the anti-fragmentation tool?
That's a big question, because typically the short term, it's more important 25 or 50, because it has a signaling effect with respect to what more is going to come, how decisive the ECB is going to act on inflationary risks. Actually, now this might change, and the anti-fragmentation tool gets more into focus, because it's more important in the medium term. How stable is the common currency politically? Because we are having this fragmentation problem. It's in the very foundation of the common currency.
Yeah, perhaps some irony there that it's driven from Mario Draghi, a man who helped preserve the euro as well. Yes. Okay, to the former point, in the short term, Stephen Englander over at Standard Chartered says that if they go at 25, the market is set up in such a way that euro could test parity again. Is that a reasonable expectation?
Absolutely, yeah, because it would indicate, in particular now following these rumors about 50 basis points, in particular now following this Italian chaos, it would signal that they are cautious, they are acting cautiously, and we're having inflation, so far above target. We have the Fed moving forward quite decisively. The ECB would drop far behind the curve if they are now not showing to the market that they are willing to do whatever it needs or whatever it takes to come back to Draghi. And it would be very bit signaling for the euro if they don't deliver.
I do wonder about the staying power of moving 50 basis points in terms of strengthening the euro, because I think about, obviously, very different situation, but Chile, for example, trying to strengthen the peso, that doesn't work. The BOJ today raising their CPI forecast, that doesn't do anything to strengthen the yen. Can the euro find sustained strength when it is all about King Dollar at the moment?
Interestingly, it might depend on the anti-fragmentation tool. It's not 25 or 50. It has an importance for signaling effect, but for the long term, if there is a way the ECB could implement an effective and that's important, legally feasible tool that would allow them to implement their monetary policy as they please, and not having to worry so much about individual, specific point of member countries, that would put the euro in a much better position. And in the end, not everything is looking great in the US either. We have this recession risks. That in the end, then, in this medium term, most might depend on whether we are going to have a full-blown gas crisis in the Eurozone.
Well, talk to me a bit about that, because we have Nord Stream, of course, today saying that flows has resumed. Can we breathe a sigh of relief yet?
No, absolutely not. Because we don't know what kind of supply we will have in the end. The EU has or is trying to introduce some gas-saving measures next week. But whether that will be sufficient, we don't know. And in the end, even if it will be, we will have a structural change away from cheap Russian gas, in particular in Germany. And this will be a burden on the euro due to the effects on the potential growth and also the yield outlooks.
Okay, Esther, thanks so much for joining. I'll let you go. I know you have a very busy day ahead of you. Francine, that was Esther Reichelt of Commerzbank.
Danny, thanks so much. What a day. I mean, if you're on a trading desk today and you see the market, it's 50-50, whether it's 25 or 50 basis points, you probably have to have a second think and speak to your chief economist most of the day. Now, we'll have special coverage of the ECB rate decision and reaction. It begins at 1:15 p.m. London time. Don't forget, the times are a little bit funky today, 2:15 Central European time. Right here on Bloomberg. Coming up, Italy's Prime Minister has resigned. We'll have an exclusive conversation with Enrico Letta. This is Bloomberg. Welcome back to Bloomberg. Now, Mario Draghi resigns as Italian Prime Minister. We get all of the latest on a pretty dramatic day, 2 days here in Rome. Hike, but by how much? The ECB is set to raise rates for the first time in over a decade. The question, 25 or 50 basis point hikes. Plus, turning on the taps, Nord Stream says gas shipments from Russia have restarted. Prices tumble. Well, good morning. A bit of a worrying moment here in Rome. Welcome to Bloomberg Surveillance Early Edition. As ever, I'm Francine Lacqua, but this time I'm in Rome. Now, this is the market, and the market perception is that they don't know what will happen in Italy. We talk now about coalition. Certainly, the perception is that we go to elections, and that could be as soon as October. It could be, there's a 70-day rule, so it won't be before October. I think it's the first time that we have elections in the fall since 1919. The FTSE may be under pressure, down 2.5%. Euro dollar holding at 1.0187, and then of course that begs questions about the ECB fragmentation tool, anti-fragmentation tool, and then the recovery funds that Italy was meant to touch in December. Now, the Italian Prime Minister has resigned. He's set to address lawmakers a little bit later today as the country begins now to look ahead to the process of choosing a new leader. Joining us is one of the best perspectives we could get you, and this is, of course, what happens next. He's the former Italian Prime Minister Enrico Letta. Much more than that, he's one of the kingmakers, possibly in exactly one that really understands Italian politics like no one else. Enrico Letta, thank you for joining us. If you're an Italian investor, you worry because you think that this is a mess at the moment and you see no end in sight. First of all, who's to blame for the demise of Mario Draghi?
Oh, it is very easy to say, because yesterday we had a moment in which the parliament decided, and there were three political parties decided not to be supportive of Mario Draghi's program. And these parties were at the beginning 5 stars, then yesterday, and that was unexpected, and I think really crazy and irresponsible, Lega and Forza Italia.
Do you regret staying in a coalition with Mr. Conte?
Well, of course, today the discussions about the future coalitions are completely different from what we had until yesterday, because what happened yesterday, it is a turning point in Italian history. We had a government working very well with the respect of the entire community, Italian community, not only business community, the people. Yeah. The people. We had the entire weekend full of calls by people, working people, representative of municipalities, asking for the continuity in this government, but also the respect at European level and at world level. And now everything is gone, and I think it's the responsibilities are very clear. We supported Draghi until the end, and we will try to keep fighting on Draghi's program, in the electoral campaign and after the elections.
So first of all, do you think what happened yesterday is reflective of how the Italians would vote in an election?
No, it is not. I think yesterday is a turning point. We had polls until yesterday, but the polls were related to the attitude of the parties that the parties had until yesterday. For instance, Lega and Forza Italia were voted by people, entrepreneurs, SMEs, thinking that they were supporting Draghi on the right track. But now they understood how crazy was the choice of Forza Italia. It was just a choice of power, just the idea to get power and to redistribute power, but they don't understand that we needed and we need to continue on the program that Mario Draghi proposed to the country.
Mr. Letta, if we go to elections, and I think I was looking at polls saying that the most likely outcome, also almost the only outcome, on Wednesday morning would have been a right-wing coalition. Is it still the case?
I'm sure that the voters will change their mood.
Really?
They will change their mood because what happened yesterday is a storm for Italy, and it is a storm also for the expectations of the Italian people. Working every day and thinking that politics and the parliament has to help them, not has to work only for their own interests. What the parliament in the large majority did yesterday, we were on the other side. We were on the side of responsibility. We supported Draghi. But the rest of the parliament decided on their own interest in terms of parties, not the interest of the country.
So we'll see elections early
I
October?
think so. End of September, first days of October, first year that we will have elections. The fall. But we had last year local elections with electoral campaign in the fall, and 2 years ago regional elections, so we are ready.
So what does this mean? I mean, who has it worse? Is it the Europeans? If you're the ECB ready to announce some kind of anti-fragmentation tool, how do you look at Italy right now?
I have to be very clear on that. Italy is a great country with a great economy, great people. It is absolutely democracy. Democracy means that we have the vote. The vote will be September instead of March.
Yes.
So it doesn't change so much.
It
complicates because what Draghi was supposed to do was very important also for the relaunch of the country during autumn.
No.
Of course, it is not the case, but I'm sure that the electoral campaign will bring the voters to understand who is responsible and who is not.
There's also a big chunk of money on this EU recovery fund, which is due. Do you think campaigning will be supporting the reforms to make sure that Europe gives Italy that money?
I'm sure, I'm sure that all the parties, they have to be compliant with this process of reforms related to the next generation EU recovery fund money. It is impossible not to be compliant with this money and with this process. So what I propose to all the parties, and I will propose to all the parties during the electoral campaign, and to sign a pact. Yeah. And the pact is that we will be all compliant with this choice and with this program, because this money is European money. It is for Italy, but it is European money.
Do you think they'll sign that pact?
I hope so.
Is the big winner in this Vladimir Putin?
I'm sure that Putin will have a cheers with his Prosecco, maybe, and he will be very happy today. And it's not a good news for Europe, for the West, for Ukraine. And Draghi and our coalition, we were very strong in supporting Ukraine. Italy was one of the most supportive countries. We have to keep fighting and keep helping Ukraine. But I'm sure that Putin today is very happy.
What do you worry about the most in the Italian economy? Again, it's inflation, it's the cost of living, it's this huge proximity actually to Russian gas.
I think the main problem today are inequalities. Inequalities are very high in Italy because of the past, because of pandemic, but they will raise if there's not the anti-inflation capacity that the government was able to put in place. And this is why I think we have to have elections as soon as possible. We hope to win elections, and we hope to continue the program of Mario Draghi.
I mean, a couple of questions actually that I've been getting from a lot of investors is, we haven't voted in the fall in Italy since 1919. Does it actually change anything?
I don't think so. I think the only thing that is that will change it is the fact that we never had a vote with the clear idea that there was a government working well for the country and for interest of parties, the right parties, Lega Nord, Forza Italia, Five Stars, everything has collapsed. That is something completely new.
Do you think you could lead a government come September, October?
It depends on the vote. It depends on the way in which we will run the electoral campaign. But my answer is very short and very clear. I'm very, very confident with the Italian voters. The Italian voters are always very wise, and they will be very wise this time too.
Mr. Enrico Letta, always great to have your perspective and your insights. Thank you so much. And we wish you the best of luck actually for today, because it's going to be tumultuous, right?
It will be, but we have to be confident. Italy is a great country, and Italy will overcome this crisis.
Yeah, I mean, it's nice looking at the rooftops to actually be quite optimistic about the country, but then you look into politics and there are question marks. Coming up, we'll dive deeper into the chaos unfolding with Italian politics. Don't miss our conversation with Renzo Rosso, the chairman and co-founder of the international fashion group OTB. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans in London. Hi, Leanne.
Hi, Francine. Tesla says it sold off about 75% of its Bitcoin holdings. The convergence added nearly $1 billion to its balance sheet. Tesla beat second quarter earnings estimates, reflecting its progress in tackling supply chain issues and COVID lockdowns at its China factory.
Q2 was a unique quarter for Tesla due to a prolonged shutdown of our Shanghai factory. The past few years have been quite a few force majeures. And it's been kind of supply chain hell for several years.
Now, Microsoft is eliminating open job listings, including in its key Azure cloud business and security software unit. The company says a hiring freeze will continue for the foreseeable future, but it's still honoring job offers that have already been made. A hiring slowdown was disclosed in May, which mostly affected its Windows Office and team groups. Google and Lyft are also hitting the brakes on hiring amid mounting recession fears and rising inflation. Google says it will pause hiring for 2 weeks to allow the company to review headcount needs. Meanwhile, Lyft will shut down its car rental business and cut 60 jobs. That's as the ride-hailing giant grapples with a labor shortage and a fall in its stock price. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, we understand, and this is from local agencies, that Russia's planning the annexation votes in Ukraine regions by September 15th. I think this comes from the Russia news agency, but we'll dig a little deeper into exactly what this means, not only their intentions, but also what it means for security, what it means for arms to Ukraine. Now, we've been discussing this all day. The Prime Minister, Mario Draghi, Prime Minister of Italy, he's resigned. Joining us now to discuss the chaos is the founder and chairman of OTB Group. He's Renzo Rosso. He's OTB's, of course, founder, an international fashion group with a range of global brands, including Diesel and Maison Margiela. Thank you so much, Mr. Rosso, for joining us. Italian business, give me the state of play today. Are they worried that they will no longer have Mario Draghi as Prime Minister?
You know, Mario Draghi is really someone at the the first time in our life from persona survivor. We started to gain respect of the country. After 30
Mr. Rosso, I'm gonna cut you off Mr. Rosso, I'm so sorry. I'm going to cut you off because I think we're having some Wi-Fi trouble sometimes with all these virtual interviews, so we can't hear you clearly. So we're going to take, of course, a look at markets. So we're going to talk a bit about Italy, and then I hope to see you back in a couple of minutes with crystal clear communication. Coming up, it's also the final two in the UK. So there's a lot of politics going on. It's Foreign Secretary Liz Truss versus former Chancellor Rishi Sunak. So we'll bring you the latest on the race, also to succeed Boris Johnson as UK Prime Minister. That's later this hour, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now let's get straight to UK politics. Not dull either. The political British landscape. Well, the UK's outgoing Prime Minister had his final parliamentary grilling yesterday, and I have to say, it was pretty exciting to watch. Boris Johnson's successor will either be the Foreign Secretary, Liz Truss, or the former Chancellor Rishi Sunak, after the pair came top in the final round of voting by Conservative members of Parliament. Well, our expert in the UK, I think she was also in the gallery when Prime Minister Johnson said, "Hasta la vista, baby," is the one and only Lizzie Burden. Lizzie, the focus shifts to the grassroots Tory parties. What can we actually expect from them?
Well, Francine, they're a very different beast to the MPs that had made Rishi Sunak the front runner in all the votes that we've had so far. So actually, they favour Liz Truss. That's what the polls say, although the polls can fluctuate because it's a hypothetical question, of course, to ask who they'd prefer to be the next Prime Minister. It'll come down to who can convince the membership that they're really the true heir to Margaret Thatcher. Liz Truss is promising tax cuts from day one. Rishi Sunak saying he wants to wait until inflation's under control. We actually had Sunak ally and former City Minister John Glenn on Bloomberg TV yesterday, and he said, think about it, they're both tax cutters, they just have different timescales for it. And that's the message that Sunak's team are going to try to hammer home over the next 6 weeks when they're campaigning to the grassroots. Although Liz Truss might steal an advantage with the postal ballots being posted out in the first week of August. Could be a done deal before we know it.
Yeah. Lizzie, I have to say, yesterday it was pretty fantastic watching Boris Johnson kind of doing Johnson at his best at, the last Prime Minister's questions. Hasta la vista, baby. Will people, miss him in Parliament, or are they happy to get rid of him?
I think they'll have to miss him, because when I was in the public gallery, it was laughter all around when he did that Terminator impression. But there were also groans, I have to say, when he tried to hammer home what he thinks is going to be his legacy on Brexit, on Ukraine, on the pandemic. Seemed a little tired to be trying to rewrite history in his favour again. He tried to do that in his resignation speech in Downing Street. But he also had a little advice for whoever is his successor.
To my successor, whoever he or she may be. Number one, stay close to the Americans, stick up for the Ukrainians, stick up for freedom and democracy everywhere. Cut taxes and deregulate wherever you can to make this the greatest place to live and invest.
A showman to the end.
A showman to the end. I have to say, stay close to the Americans. Do not, do too much on social media, or don't think about social media too much. I mean, good words to live by. Lizzie, thank you so much. Lizzie Burden there with the very, very latest on UK politics. Yeah, wise advice. Let's get back to our discussion on the chaos in Italian politics. Still with us, we hope with a better connection, is the founder and chairman of O2B Group. He's Renzo Rosso. And of course, this is an international group, including Diesel and Miso Margiela as his brand. Renzo, can you hear me first of all? And are you worried about what comes after Mario Draghi?
But, this is a strange situation. I can't believe that we are astonished. The Italian people that are running the country in terms of economy, the Italian salespeople, entrepreneurs, we are astonished regarding the situation, because it's the first time in our life that we have a so fantastic gentleman, Mario Draghi. I think the world really loves him. Everybody loves him. And that finally we can have started to have a contact with all countries in the world. We started to have appreciation from the other country that the last 20 years, Italy was not very much supported from the other country. This is the first time that We have someone really can drive the economy, solve the pandemic. We have also the worst problem, the Ukraine. And I cannot understand why this stupid politician, they can really broken this fantastic magic parliament.
But Renzo, look, you're one of the most famous and successful entrepreneurs, frankly, that Italy has ever had, especially in the fashion and luxury space. What do you need from the next government?
But from the next government, now we go to the votation. I hope that the Italian people finally start really to see who are wrong and who are right. Because normally all these politicians, they just play and blame on the opposition. They never suggest something. They just want to think about themselves, and they go to reach a vote on the not on the right way. So I hope this time finally the people really can, Italian people can wake up. I hope it can be a good campaign for the next votation. And what I dream that maybe if someone's coming up with maybe more Republican, more on the middle side, and maybe we can hire again Mario Draghi, because I don't see any man at the moment that really can substitute Mario Draghi. So the Italian politician right now, that everybody wants to be the winner.
Yeah.
No,
this is because he's respected, or because he can push reforms?
No, the Mario Draghi is very well respected, but you know that this government was finished just because a few Italian politicians, I think, it took over their own territory, just on the proper interest. They don't care about the Italian interest and the Italian economy, and this is why Italy, for the last 20, 30 years, was a disaster. Italy very strong, and Italy country is a stay alive thanks to entrepreneurs, thanks to the people that are running the industry, thanks to the people that really every day support Italy, and not from the politician side. We are a disaster. We really, this time, I hope that we can find a right solution, a right combination, and maybe I hope that we can bring Mario Draghi again on board.
Renzo, if there's no Mario Draghi, what do you need from a prime minister or a treasurer or a minister of finance? Is it help with energy? Do you worry about this inflation that it's running rampant, out of control, and what that means for business and for wages?
But you know, Mario Draghi was perfect. I just needed to find someone, or him or another one, that have the same attitude, and to be in position to drive the country, because right now it was impossible, because it was everybody on the government, and it's impossible that everybody can be on the government. And the economy, I think, is incredible. I have also this formal mission from the Italian government, how to to give visibility to the best company that we have in Italy. And I am incredible discover so many companies that we have, from high level to the middle level, companies that really are fantastic. And I hope.
Renzo, we're running out of time. Next time we do this interview in person. Renzo Rosso there from OTB. This is Bloomberg.
I'm always nervous going into the summer. Bad things happen to the market in the summer.
All the talk about whether we're in a recession, and I happen to think we are, is of secondary importance. What's of primary importance is inflation.
The doom and gloom on recession is a little bit exaggerated at the moment.
In the Eurozone's case, we think that it will dip into a mild recession.
The real problem is that the Eurozone needs to proceed very quickly towards economic and political integration.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It is 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Mario Draghi calls it quits. Italy's Prime Minister resigns in a move that will add to the country's political chaos and stoke economic uncertainty across Europe. Meanwhile, Russia resume gas flows to Europe via the Nord Stream pipeline, providing some relief for a continent that was bracing for a complete halt of supplies. The European Central Bank gets off the sidelines in the fight against inflation. The ECB is about to raise interest rates for the first time in 11 years. And Tesla CEO Elon Musk sees an end to what he calls supply chain hell. Musk says the electric car maker could have a record second half of the year. Welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London with Matt Miller and Kailey Leinz in New York. Anna Edwards is off today. And Kailey, a reminder as well of the geopolitics with Russia announcing plans for a vote, an annexation vote in some of the territory in which it occupies in Ukraine.
Yeah, plans for that vote to happen by mid-September, Tom. So we'll have more on that story in just a moment. But first, we want to run you through the market action, starting with Asia overnight, where really it was a mixed session. On the one hand, you had stocks down in Hong Kong and China, a large part of that due to the growing crisis in the property sector and concern about defaults on the rise. So the Hang Seng Property Index was down about 3 percentage points overnight. The other big story out of Asia, though, of course, was the Bank of Japan decision. You had the Nikkei 225 up by about 0.4%. No surprise, they're keeping it easy. They held rates unchanged. They're still targeting 25 basis points on that 10-year yield, even though their inflation forecast was raised more than expected to 2.3% for the year. So on that 10-year yield, we're south of 25 basis points, actually a little south of 24 basis points, while the yen is fractionally weaker against the U.S. dollar, trading at 138.69, Matt.
All right, well, we are seeing a little bit of a sell-off here in futures. Right now, down just about 0.25% after really a great week for the S&P 500. The U.S. 10-year yield rising just about 2 basis points right now to 3.0471. So as that yield rises, investors have less of an incentive to buy equities because you can get more from the 10-year or more than you would in relation to the S&P dividend. Now, NYMEX crude down $3.50, so a pretty big move for oil, coming in well under $100 after yesterday's retreat from relatively high levels. 96.44 is what we're seeing for text intermediate, and Bitcoin is also off 1.6% since midnight, but it is still around 23,000 at 22,881. It's a very correlated asset, and that's probably why we see it going down today. Tom, what do you see in terms of Europe?
Yeah, Matt, we're zeroed in, of course, on what's happening in Italy, and that's where the biggest losses are being felt across the equity markets, now down 2.2% across the major index, the FTSE MIB, over in Italy. We do have the story around the gas flows coming from Russia back to 40% volumes. We'll break that story down for you. In terms of the other major economies, you're seeing pressure in the UK down 0.4%. The German DAX is down 0.8%, and over in France, losses of 0.3%. But really, it is Italy, of course, where the selling pressure is most acute, particularly the banking sector. The last time I checked, losses of around 4% in that sector. Let's switch it on and see how things are playing out then across European equities as we look ahead to that decision by the ECB, the debate as to whether they go 50 and front load or stay with the guidance of 25 basis points. If they go 50, Standard Chartered said you could see a 2% move in euro dollar, the single currency currently at 1.01, just gaining 0.1%. In terms of the broader benchmark here in Europe, losses of 0.4%. And of course, we continue to look at BTPs. That Italian debt, the sell-off has been pretty strong. 17 basis point move higher on the benchmark 2-year. That's the 2-year. We're looking at the 10-year as well. That has also seen a big spike in yields, of course, on the pressure around Italian debt and the political risk, and gas as well on the back of those flows from Russia, just down around 4%. Kailey.
So many European stories to keep on top of this morning, Tom, but let's begin with the political chaos in Italy and get more on that now as Prime Minister Mario Draghi has offered his resignation to Italy's president. Bloomberg's Francine Lacqua joins us now from Rome with more. Francine, is Draghi resigning now the only option, and what happens next?
Yeah, so he's resigned, and really, Kailey, good morning. It was 100% the only option because we thought he had support not from one coalition member but the others, but actually the others at the end of the day yesterday also let him go. Now, this was not because they didn't believe in him. This was bickering between the coalition members, but it doesn't matter. He's no longer in charge. We'll go to elections probably in September and October. And the question is, what does it mean for ECB fragmentation rule? What does it mean for access to the EU recovery fund so badly desperately needed, 20 billion that should be given to Italy if they continue with the reforms. And whoever the next government, whoever the next prime minister is, will they be able to guarantee, of course, to stay on the path to reforms, to make sure they have access and friendly relationship with Europe and the rest of the world?
As I was reading his emotional speech, I thought, man, they're going to regret this. Do they regret this? What's the reaction to the turmoil that is almost like the resting state of Italian politics?
I mean, I know we've had a lot of governments, but think about this, Matt. If you look at, the inflation, if you look at the cost of living, if you look at the need for stability to encourage the ECB to maybe give you a helping hand and that EU recovery fund, it probably could not have come at a worse time. Will they regret it? I think it depends on what investors do, on what markets decide to do. But the papers this morning were pretty punchy. Look at this. Shame on Italy from La Stampa. Il Tempo, which is a center. I'm going to actually not show you this because it's a swear word in Italian, but they're pretty mad about what's happening.
We're adults.
They call it the suicide of Mario Draghi because he was uncompromising. And then this is goodbye, Mario Draghi. Look, it depends on if the next person in charge is considered a safe pair of hands, liked by investors and stable, to see whether markets and voters will regret it. But then it's democracy. You can't go against democracy. Something needed to happen, and an election it is.
All right, great coverage for us out of Rome, Francine. Thanks so much for joining us. Bloomberg's Francine Lacqua out of, on the ground there in Italy. Tom?
OK, here in the UK, Foreign Secretary Liz Truss ousted Penny Mordaunt in the race to become Conservative leader and the UK's next Prime Minister. She will compete against former Chancellor Rishi Sunak. The focus now shifts to about 175,000 grassroots Tory members who make the final choice before the winner is announced on September 5th.
All right, let's talk about what's going on in Russia. Tom, you were highlighting at the top of the show that the Kremlin now plans to hold referendums in Ukrainian territories occupied by its troops to give grounds for President Vladimir Putin to absorb them into Russia as early as September. Joining us now for more is Mark Champion, our senior reporter for international affairs. And Mark, I saw this headline. My first thought was, is this the beginning of the end of the war?
Yeah, I mean, a good question, and one I think we'd all like to know the answer to. I mean, essentially, this is something that the Russians have been wanting to do for several months already. The reason they haven't done it was that they couldn't secure the support from the bureaucrats that they needed to organize an election, and they couldn't really guarantee that they get the kind of result that they want. Nothing there has changed. What seems to have changed is the delivery of U.S. HIMARS, these sort of longer-range, very accurate artillery that the Ukrainians have taken delivery of, and they've been using them to destroy dozens of weapons depots behind the Russian front lines. This has been a very successful strategy, and it's difficult to know exactly what the impact has been, but there seems a clear link between the reduction in the ability of the Russians to deliver firepower at the front and these attacks. And now you have the Russians saying, look, we're going to go ahead, but it looks like they're going to go ahead and get these referendums done so that they therefore have a sort of stronger claim to be able to say this is now part of Russia, you attack or try to take this back at your peril.
OK, dusting off a well-used playbook, of course, and we'll see what the response is from Ukraine and its allies. Mark Champion, of course, breaking down the latest on those moves by Russia. Thank you. Meanwhile, Russia has resumed sending gas through its biggest pipeline to Europe after a 10-day maintenance period. That will provide some relief, at least, for the continent that's racing to store the fuel before winter. Bloomberg senior executive editor for energy and commodities joins us now. Will Kennedy. Will, thanks for joining us on the set. The significance then, we're back to 40% volumes, but a lot of uncertainty still around these gas flows from Russia to Europe.
Of course. In the immediate reaction, gas prices are down a little bit this morning, and that's relief that they did come back. There had been some concern during this maintenance period that it wouldn't come back, that the Russians would just say, you're going to get no more gas this winter. We're back to 40%, as you say, but that's unlikely to be the final story here. President Putin yesterday was talking about more maintenance that needs to happen on the pipeline in coming weeks, which may give Russia an excuse to put flows back down 20%. There's a lot of gamesmanship here. Clearly, as we go into the winter, a winter where Europe is unlikely to have all the energy it needs, Russia is going to use the flow of gas into Europe as part of its overall strategy.
All right, Bloomberg's Will Kennedy, thank you so much. So massive question marks around the gas story and the economic consequence for Europe, plus the political turmoil in Italy, all happening at the same time that the ECB is supposed to make a monetary policy decision today. It is a very, very tough job for Christine Lagarde and co. Of course, they're expected to raise rates for the first time in 11 years. But there's a lot of issues that they have to take into account. Bloomberg's Danny Berger joins us now from Frankfurt for more on what to expect. So, Danny, it's not just about how much they hike rates. We're also looking for some kind of clues as to what that anti-fragmentation tool or transmission protection mechanism is going to look like.
Right, and the political chaos in Italy making that so much more difficult with the anti-fragmentation tool. Credibility is at stake here for the ECB because already off the bat, there are two big ifs. If it's politics that is widening out Italian spreads, does it look optically bad for the ECB to have an anti-fragment tool when their mandate is price stability? It is certainly not interfering in local governments. Of course, we're also expected to face a challenge from the German court system on that anti-fragmentation tool. So that's one side of the credibility coin. The other side is 50 or 25. I was talking to David Cole, Julius Baer chief economist earlier, who said the only argument for going at 25 is of forward guidance credibility. They have guided so explicitly that they risk using guidance as a tool. But he says, look, perhaps that's what's needed. Perhaps we go back to the old days, kind of ironically, of Mario Draghi, where you didn't have that explicit guidance. The debate for 50, which I should say markets are split right now, it's a coin toss, whether or not it'll be 50 or 25, is inflation. It is at 8.6%, and it frankly does not make sense to have such accommodative and negative rates right now.
All right, Danny, thanks very much for joining us. Danny Berger there, standing outside the ECB headquarters in Frankfurt. Don't miss our special coverage of the rate decision and reaction to it beginning at 8:15 a.m. in New York, 1:15 p.m. in London. Now, President Biden says he expects to speak with China's President Xi Jinping within the next 10 days. This comes as the administration is considering whether to lift some tariffs on Chinese imports in an attempt to ease inflation. Jack Fitzpatrick, Bloomberg government reporter, joins us now out of D.C. for more. So, Jack, are we optimistic that this will happen?
Well, you know, the president said that he expects this phone call to happen in the next 10 days, but there's been a little bit of a pumping of the brakes since that comment by the president. Even if the phone call does happen, behind the scenes, the White House officials have downplayed any expectations that this would be a call specifically about tariffs, even though, of course, the call would raise the question about consideration of lifting Trump administration tariffs on China, especially with what we've seen on inflation figures, but there would be a pretty broad agenda for the call if it were to happen. In addition to tariffs, you know, the tension with China over Russia and their refusal to sign on with other countries in terms of sanctioning Russia would be one issue. Climate issues would be another. So obviously it would be a major call if it is to happen in the next week or so, and the tariff question is a key question, but the White House has not followed up and made it clear that would be at the top of the agenda, so we have to limit our expectations on that front for now.
Okay, Jack Fitzpatrick of Bloomberg Government in Washington on that potential call between the two presidents of China and the US. Meanwhile, onto a corporate story of the hour, really. Tesla beating profit estimates in its latest quarter and also selling a 75% of its Bitcoin stake. The results reflect the company's progress in getting production back on track while tackling supply chain hurdles and COVID lockdowns at its factory in China. CEO Elon Musk spoke yesterday.
Q2 was a unique quarter for Tesla due to a prolonged shutdown of our Shanghai factory. The past few years have been quite a few force majeures, and it's been kind of supply chain hell for several years.
Okay, Craig Trudell, Bloomberg Global Qatar, joins us now for more in the London studio. Craig, it was a beat, obviously, for Tesla, but the outlook is still somewhat murky.
Yeah, I think the idea that they would have potential for a record-breaking second half of the year is not necessarily all that exciting, in the sense that when you think about where they were last year with 2 assembly plants globally, they have 4 now, so I would sure hope so that they would have a record-breaking second half. But the question is really how quickly can they get those 2 new plants in Germany and in Texas up and running. And there was a lot of talk about one of Musk's, favorite phrases, force majeure, things out of Tesla's control. So, while he sounded optimistic, as he often does, and sort of, giving the forward outlook for the company, he was maybe a little bit more tempered than we sometimes, can hear him be.
Yeah, well, it's all relative. More tempered for Elon Musk is still sometimes more excited than anyone else. Bloomberg's Craig Trudell, thank you so much. Now, another auto story that we're watching, a Bloomberg scoop yesterday that Ford is preparing to cut as many as 8,000 jobs as it tries to fund its push into EVs. People familiar with the matter say the cuts will come in the new Ford Blue unit, responsible for producing internal combustion engine vehicles, as well as other salaried operations throughout the company. Meanwhile, Microsoft also is taking action on jobs, eliminating many open ones, including in its Azure cloud business and its security software unit, as the economy continues to weaken. Microsoft said the hiring freezes will continue for the foreseeable future. And as for the impact that's having on both of those stocks in pre-market trading, we do have Ford basically unchanged in early hours, but Microsoft is down about 0.9%. And there are plenty of other stocks on the move as well, one of them being United Airlines, which reported after the bell. Yes, it ended a streak of 9 consecutive quarters of losses, but its profit came in below expectations, and it's having to pull back on its capacity expansion plans for 2023 because they just really need to get a handle on the flight disruptions they're currently seeing. So that stock is down 7%, dragging down peers like American and Delta by 2 to 3% as well. And elsewhere in the travel space, Carnival is taking it on the chin this morning after announcing a $1 billion stock offering. It's down almost 11%, and its peers, Royal Caribbean and Norwegian, each down a little more than 5%, Tom.
Okay, some of the movers to watch today. Coming up, meanwhile, the threats to Europe's fragile economic growth. Of course, they are numerous. We will get analysis on all of that with the global head of economic research at UBS. Stay with us. This is Bloomberg.
Good Thursday morning. This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz here in New York. Tom McKenzie is in for Anna Edwards in London. Take a look at BTP spreads. Now, this is the difference between the yield on Italian debt and the yield on German bunds, which are considered the benchmark for the European area. They have blown out, for those of you listening on radio, they have come back up higher than we've seen since basically the beginning of June because of the political turmoil that we're honestly used to in Italy, but they've been so low for the past year and a half as Draghi's been in charge. Aaron Captain, UBS chief economist, joins us now to talk about what the loss of Draghi means for Italy. Of course, Aaron, we assume that he's going to stick around long enough to put the budget together, but even that will be contentious. What does this mean for the Italians?
Well, I think there's sort of two immediate issues. So one is it makes it more difficult for the ECB to roll out the anti-fragmentation tool, depending on what the conditionality is that they attach to that. If there's no functioning government in place, then there's going to be uncertainty about what the future government will be willing to implement. But the other problem is that Italy at this stage is still 3.5% of GDP away from a debt stabilizing primary. So, creditors need to have some degree of confidence that the future Italian government will be able to deliver that type of adjustment to stabilize the debt. And pending that, there's heightened credit risk that you need to reprice. So I think we're trying to find a level here that's sort of reasonable in terms of that credit risk.
Aaron, where does that mean you focus in terms of BTPs and the potential next upside? Where do you expect that to go? You talk about the risks around the anti-fragmentation tool. We should get some more details out later today. Currently around 354, 352 now on the 10-year BTP. What are you looking at in terms of the next level?
I think, the tool's coming. I think that should be mostly priced now. And I think expectations are that it'll be, at least in its design, will sort of tick all the boxes in terms of being open-ended, no constraints on buying amounts, no issuer limit, no capital key, some ex-ante conditionality. So I think that's largely what's expected. And hence, right now, it's a bit asymmetric in the sense that you have lots of political uncertainty. And I think next stop on BTP spreads is 250.
250 is the next stop. What does this mean for the ECB's rate hiking cycle then? 25 basis points or 50 basis points? Does it make it that much more difficult for them to front load given the economic challenges now in Italy?
No, I don't think so. I mean, this is the first hike. It's easy to be aggressive early in the cycle. Whether they do 25 or 50 is, I think, neither here nor there. I think they do need to roll out the anti-fragmentation tool today, right? There's uncertainty about that. They've been discussing it since April. I mean, these are not the choices are not that hard, right? It's pretty obvious what the evils are that they need to choose from, but obviously getting to an agreement is hard. So, look, if they do that today, then I don't see why it would really matter if you do 25 or 50. That's a different decision, right? Do you adhere to your guidance or not?
Well, Arend, as you say, this is just hike number one. The question is, how many hikes are they actually going to be able to execute given the deteriorating economic environment? I was speaking to a woman from Capital Economics yesterday. She said that she sees the ECB getting to 2%. Can they realistically get up there given the weakness they are hiking into?
I mean, we have a baseline where they thread the needle and then maybe get to 175 by the end of the year, but then absolutely everything needs to go right. So you right now you're already at maxed out in your LNG imports. If you sustain the current sort of Nord Stream gas storage, then you can just about get there without any rationing. But if you have a cold winter, you're already short. So I think that is really best case scenario that you get to those type of levels. I think actually near term, the risk is that the window is going to close on them. So I think this meeting, I think one of the reasons, in addition to just getting a move on of doing 50, is that by the September meeting, we could be in what looks like a recession, right? So if they, even without the rationing, it is now possible that in Germany they start to, they trigger Article 24 on their emergency gas law. They basically lift energy prices by, we think, as much as 50%, and then you have so much additional consumer drag that you start to generate negative GDP growth. So once you get into that type of dynamic, I think the hiking cycle gets aborted pretty quickly. So when we think through all these different scenarios, they're all sort of gas related, like what are the different degrees of gas disruption, and they basically give you lower stop out levels on the normalization cycle. So I think 175, 200 is absolutely best case. I think if you start sort of probability weighting those gas scenarios, you end up with something quite a bit lower potentially than what the market is pricing.
Well, it seems as if all central banks are sort of stuck between a rock and a hard place, but the ECB has their hands tied more than any of the other major central banks. Do you agree?
Yeah, I agree, and partly because, of course, they've been most respectful of their own forward guidance. So you could say, well, they've trapped themselves, but by the same token, they're the ones who have probably preserved the most credibility in doing future forward guidance. So there's a cost to pay for obviously moving slowly, but they have the additional constraint of, I think, having a much more severe tail risk like right ahead of them, which potentially stops them short on the normalization. So yeah, I agree with that. And inflation hasn't even peaked yet, right? So we think inflation will peak maybe by September, and that's barring any further sort of price disruption to energy prices.
All I know is that I do not envy Francine Lacqua today. Thank you so much to Arend Captain of UBS. Now, keeping you up to date with news from around the world, here's the first word. A Biden administration official predicts that a price cap on Russian oil should take effect by December. Deputy Treasury Secretary Wale Adeyemo says the cap will be imposed alongside EU restrictions on insurance for oil. Supporters argue that a cap would deprive Moscow of much-needed revenue. It also would keep prices from soaring when the insurance ban takes effect. China has fined ride-hailing giant Didi Global more than $1.2 billion. That wraps up a year-long investigation that symbolized Beijing's tough campaign to rein in its powerful internet industry. Last year, Didi pushed ahead with an IPO in the U.S. against the government's wishes. And the fallout from a series of defaults in the cryptocurrency industry is spreading. A crypto exchange that operates in Singapore and Thailand, ZipMex, has halted withdrawals. It's just the latest platform to succumb to financial difficulties stemming from exposure to Celsius. We'll have more coming up next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition, and here's what you need to know. Mario Draghi calls it quits. Italy's Prime Minister resigns in a move that will add to the country's political chaos and stoke economic uncertainty across Europe. Meanwhile, Russia resumed gas flows to Europe via the Nord Stream pipeline, providing some relief for a continent that was bracing for a complete halt of supplies. The European Central Bank gets off the sidelines in the fight against inflation. The ECB is about to raise interest rates for the first time in 11 years. It may even deviate from guidance by considering an increase of double the planned quarter point. And Tesla CEO Elon Musk sees an end to what he calls supply chain hell. Musk says the electric car maker could have a record second half of the year. Tesla maintained its plans to increase vehicle deliveries by 50% annually over the next few years. I'm Tom McKenzie in London with Matt Miller and Kailey Leinz in New York. Anna Edwards is off today. Matt, you're checking on the markets as we, of course, assess the political implications of the fallout from Italy.
Absolutely, and there is a lot in terms of market implications in Europe. Of course, here in the U.S., no one really cares that much in terms of how it affects S&P futures. We're still down about 0.25%. We're still interested, obviously, in what's going on in Italy, but after 67 governments and 75 years, I think we're used to it, and we don't have the spreads here. The U.S. 10-year is up about 2 basis points, 3.0452 right now. So it looks like this rise in rates maybe supports a little bit of a sell-off in stocks, and especially since we've had such a good week on the S&P. NYMEX crude down 385 a barrel to 96.03 for Texas Intermediate, so a little bit of relief there as well. Maybe that works in the opposite direction. And Bitcoin is very positively correlated. That's why we see it down 1.33%, but still at almost $23,000. So Bitcoin has been holding at a relatively high level this week as well. Yeah. Kailey, what do you see in terms of pre-market movers?
Well, Matt, I wonder how much of that Bitcoin move has to do with it just being a broader risk-off sentiment today, and how much it has to do with news that Tesla sold most of its Bitcoin stake, about 75% of it, which brought in about $900-something million of cash for the company. And of course, we got that news in the context of its wider earnings report. It did beat profit expectations. It's working through those issues in China and the supply chain. Elon Musk saying in his own words, supply chain hell hopefully is almost over. Tesla is up about 2.5%. There's some other earnings news out there, though, that's not so good. United missing its expectations on profit. It's pulling back on capacity in 2023. That stock is down 6.4%, while Carnival Cruise Lines is down more than 10% after announcing a $1 billion stock offering. And finally, we continue to monitor the hiring freezing or outright firing story out there, specifically when it comes to technology. Microsoft, the latest to say it is pulling back on jobs in its Azure cloud unit as well as its software security business. That hiring freeze going to last potentially for quite a while. That stock down about 0.8% before the bell, Tom.
Okay, Kailey, as we've been discussing, of course, it's very much a political story, a macro story as well, with the ECB coming up later in the next few hours with their decision, whether they go to 25 basis points as flagged or 50 basis points. But Italy as well, of course, with the resignation of the Italian Prime Minister. And you're seeing pressure across Italian equities, down 2%. Stocks, particularly around the banking sector, under pressure in light of the political uncertainty, whether indeed we move to elections and how any next government could form, what it means for that funding from the EU. Across the benchmark, you're seeing losses of 0.2% here in Europe. Euro-dollar as well remains in focus for us. Not a lot of movement at this point. Standard Charter says if you get 50 basis points from the ECB, you could see a 2% move in the single currency. And of course, BTP is 353, a move of 14 basis points on the debt, selling off in Italy again, linking to that political rancor. And we're going to get more analysis now. Let's get back to what is happening in Italy, where Prime Minister Mario Draghi has, of course, resigned. Bloomberg's Francine Lacqua joins us from Rome. Francine, where then does this leave Italy?
Well, first of all, Tom, I have some beef with Matt because he says the Americans don't care. I know the American markets maybe don't care too much about what happens in Italy. But, Matt, I walk in Rome and literally every second person is a tourist and they're all Americans. So let me tell you, if this country goes into meltdown, watch out for tourism. Now, the impact, of course, this has on the economy or where we are is Mario Draghi leaves. Okay, what happens next? A snap election. What does that mean? Who could come into power? And what that means for the relationship between Italy and Europe, Italy and the ECB is really very much up in the air. And so that's what we're trying to figure out. And that's really reflected on the angst that we're seeing in the markets right now.
I live in Westchester, so I'm surrounded by Italians. We care, of course. I'm just saying it doesn't hit the markets as hard as it hits Italy. You know, what I find interesting, Francine, is you're still fighting for $200 billion in support from the EU, right? That's COVID aid. Yeah. Are you getting that? Have you gotten it? Do you have to pay it back if Draghi leaves? What's the story?
Yeah. Yeah, so this is the EU Recovery Fund, and this is crucial, Matt. 100% is the one thing that investors are most worried about. Now, there's a second, or not a second, but there's a tranche. So this is a payment, a packet of that money. It's 22 billion euros, and it should be given to Italy in December. But again, this is a tit for tat, right? This is the EU saying, look, we have this mechanism. You access 22 billion euros if you do this, this, and this. And the priorities are reform, structural reforms, pension, and things like that. And this was the plan that Mario Draghi was adopting. So now this is up in the air, but then we spoke to politicians right here on this melting rooftop, and they said, look, it would be pretty stupid for anyone who comes into power not to stick that reform, not to stick with those plans, because they need that money so desperately. So, you know, we'll see what they'll campaign on. And then the other question is, of course, whether this is a big win for Vladimir Putin, because the coalitions and the parties that actually got out of government are more pro-Putin than others.
All right, Francine, thanks so much. It's been fantastic watching your coverage from Rome. Great respite from like Liz Truss versus Rishi Sunak in the UK. Let's turn back to what's going on in the energy crisis, which, you know, honestly is at the heart of the market problems in Europe. Russia resumed gas flows to Europe via the Nord Stream pipeline, providing some relief for a continent that was bracing for a complete halt of supplies. Joining us now is Michael Stoppard, S&P Global Chief Strategist for global gas. So we have confirmation, I think now, Michael, that 40% of the flows have been restored. But of course, you can never be too sure that Putin won't just turn it off if he feels it necessary.
Well, I think that's absolutely right. Prices are still at stratospheric levels. They've only come down slightly on the news, and I think that's telling you that the market just interprets this as a temporary reprieve.
Okay, so if it's temporary, obviously Europe wants to make some plans in case the gas does shut off. We heard Ursula von der Leyen saying yesterday that she thinks it is likely, maybe if not today, it could happen at some point. So the European Union is proposing cutting natural gas consumption by 15%, trying to address the situation from the demand side. But Michael, is that enough of a cut to make up for the absence they're going to feel?
So first of all, the European Union, I think, is hoping for the best, but planning for the worst case scenario. I think that's the idea. And I think what they're proposing is what I would call preemptive cuts. Rather than wait for winter, they're proposing that we conserve more gas in the summer period in order to build those storage levels as much as possible. And yes, actually, I think 15% is actually rather more than that's required. We do need to make some conservation savings, but 15% should be more than ample. And at current flows, we would expect the storage target by November actually to be met and exceeded. But of course, the key caveat there is at current flow rates.
Right, and there's a question of whether they will continue at all, if only at that rate. As far as infrastructure, we've talked a lot about whether Europe has adequate capacity to intake things like LNG from the United States, for example. I mean, those take a lot longer to come to fruition. And I'm just wondering, from an infrastructure perspective, longer term, if we do see a cutoff of Russian gas, it's not just going to be about winter 2023. You got to figure that out in the longer term.
Yeah, in the energy industry, we talk about the law of long lead times. And that means it takes 4 to 5 years to build a new LNG project normally. So long-term planning is required. But one of the surprises of this crisis has been actually how much LNG has been available for the European market. There have been huge increases in LNG flows. And what we're actually seeing at today's stratospheric prices is a complete choking off of LNG demand in a lot of emerging markets in Asia. Places like Pakistan and Bangladesh have been really forced out of the spot market, and that has freed up more LNG to come to Europe. But you're absolutely right that to build the next level of capacity is a long haul. We need 4 or 5 years at least for the market to adjust.
Michael, where does that leave your views? I mean, it's complicated. It's a clearly very complicated picture. But in terms of your views on pricing, a little bit of softness, as we said, down about 4% in today's session. In terms of European gas prices, does that softness continue as you look out towards the end of the year? What are you looking at in terms of key pricing levels?
I mean, prices have softened from yesterday, but from a historical point of view, we would not describe these prices as soft. We are at 5 times normal historical levels. And I think these prices that are abnormal by historical terms will continue for at least the next 2 years, precisely because it will take so much time to bring on new capacity into the global gas market.
And which sectors of the economy are most vulnerable to that then?
Well, there's a big to and fro going on about that. Householders are defined as protected customers. So supply to households should be the last thing to be cut, which puts more focus and pressure on the industrial sector. But the German industrials are pointing out the importance and the essential nature of many of their products, and are pointing out that consumers should make efforts to conserve energy as well. So I think all sectors will need to tighten their belt and be more gas and energy conserving more gas and energy, but households will ultimately be protected.
Michael, in terms of limiting future dependency on Russia, how is the building of LNG terminals going to accept gas from other suppliers?
We've seen a flurry of contracting activity, which will underwrite the financing of new LNG projects. But it's been noticeable that it's been overwhelmingly with the United States. So all bets really on the United States for another major supply build to come on in the latter half of the decade. And we have seen some investment decisions being made in the last month on 2 major projects, and we do expect more, but very much a focus on the US.
And the other, I mean, the competitors, for example, in Germany, obviously they have a lot of lignite coal, but they're also, I mean, obviously they're trying to get away from that. They're also still planning on turning off the nuclear, the remaining nuclear plants that are in operation, right?
I would be really surprised to see any significant turnaround in that policy. First of all, because I think it's that's strongly entrenched in German thinking, but also because it's some way down the road and you can't just flick a switch and suddenly decide to change course. So I wouldn't expect a major change in nuclear. And also on the coal side, this really is a temporary stopgap. Yes, we are burning more coal. We will be burning more coal in power stations. Yes, that's bad for emissions, but it's not as if we're starting up new coal mines with a 20, 30-year life. That's not happening.
Okay, Michael Stoppard, S&P Global Chief Strategist for global gas, on the evolving nature of the energy structure here in Europe as we adjust, of course, to those volatile flows from Russia. Now, stay with Bloomberg for our coverage of the ECB policy decision. Of course, gas has an implication there, an impact there. And the news conference, that all starts at 8 a.m. in New York. That's 1 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal booth. Coming up later today, Bank of America CEO Brian Moynihan. That's at 12:30 p.m. in New York, 5:30 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Tom McKenzie in London. Anna Edwards is off today. And what a day it is, guys. It is an incredibly news-packed Thursday, all of it really centering around Europe because, of course, we get the ECB decision coming up at 8:15 a.m. Eastern Time, and the amount of different economic and political events that they need to be taking into consideration today is staggering. The resignation of Mario Draghi in Italy, which is blowing out the BTP Bund spread at the same time that you have gas flowing once again through Nord Stream 1, Matt. The question is for how long it will do so. And if it does eventually stop flowing, that puts Europe in a difficult economic position as the ECB is talking about raising rates.
Yeah, absolutely. And we got, don't forget, a big red headline that Tom highlighted at the top of the show. Russia now plans to hold annexation elections September 15th in the parts of Ukraine that it occupies. So this could signal the beginning of the end of the war. I think we all hope for that to cease there. And you've got Liz Truss and Rishi Sunak battling to take over as leaders of the Conservative Party, and Liz Truss seems to be the front runner there. So there's so much going on, and you're right, it all centers around Italy. Tom, you'd expect market turmoil as well, but you don't really see it beyond the Bund BTP spread blowout because you've had a recovery a little bit in the price of gas, right?
Yeah, you're seeing a spread now of about 224 on the BTP's 10-year versus the German Bunds. Of course, equities in Italy under pressure, down, about 1.8%. So pairing some of the heavier losses, it's the banking sector that's feeling the squeeze. But yeah, you did have at the start of the session, of course, the news that Nord Stream 1 was back online with 40% of volumes. But as we've been discussing, and as you mentioned, there is all that uncertainty over just what Vladimir Putin is planning and whether or not he's going to see what's happening in Italy as a success. As Francine was mentioning, there are divergent views in Italy about how far to go in supporting Ukraine.
Yeah, well, let's talk more about Italy now, Tom, and the political situation there. Vincenza Belfiore, wealth manager at Azimut, joins us now. Vincenza, can you just give us your reaction to the resignation of Mario Draghi this morning and what the economic and financial consequences going to be for Italy before we talk about broader Europe?
Hi, everybody. Yes, for Italy and to a lesser extent for Europe, the fall of Draghi is a negative element. I think that you could agree. Draghi is a figure of great charisma and is aligned with the pro-European project and represents a sort of a guarantee that Italy had towards to the rest of Europe. Being the head of the ECB also allowed him to create a network of contacts of international figures that facilitated his work. Based on today's projection, in the event of early elections, it is likely that we will have a populist leader instead of a pro-European leader like Draghi. And this can be a problem, both to unblock PNR tranche and on the financial side, a price risk with a growing yield.
In terms, Vincenza, can I just ask? Can I just ask in terms of, so typically Italy does not hold elections in the late summer, early fall because of putting together a budget that's necessary by law, I think in October or so for the EU. Is that process endangered right now?
Yes, I think that it could be dangerous. If Draghi has resigned, he can manage the current administration, which does not include the financial one. And that is the main topic. We will have the election. We could have the elections after 70 days, and that would be at the beginning of October, and it will be very, very difficult to have the approval of the budget by the end of the year, and that could be a problem.
Okay, Vincenza Belfiore of Azimut, thank you. As we look ahead to the potential elections then in Italy after the resignation of Mario Draghi, maybe a populist leader, and the challenges around putting a budget together in October. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Tom McKenzie out of London. Tom Keene, co-anchor of Bloomberg Surveillance, joins us now to talk about, Tom, something we haven't been hearing that much about in recent years, but this quarter, a lot more people are focused on nominal GDP.
Nominal GDP is top-line GDP. It's the real GDP that we're all addicted to in a time of no inflation, plus the real GDP plus the inflation component, which of course now is big, big, big. Looking at nominal GDP in US dollars for the pivot point of Europe, Germany, as compared to Italy back to 2007, is an extraordinary chart and speaks to the value of Mario Draghi. I can't say enough about this chart. It shows a 30% differential going out, 13, 14, 15 years, and it's just simple. Germany has done what it's done. It's moved up nicely, and Italy, Matt, is flatlined.
All right, very interesting stuff, and of course we're focused on it here as well. Nominal GDP, Tom, in the U.S., 10%, so strong at a time when real GDP may have contracted for 2 quarters in a row.
Well, those are the partial differentials, and that real GDP is dynamic, and right now it's pretty miserable, to be honest. You know, it's a generalization. But what is inflation going to do, and what does that mean for the animal spirit that corporations deal with and such? And this is a raging debate into earnings season, is what will the guidance be given an ample nominal GDP? That's a question, Matt, I don't know, we haven't asked in 10, 15, even 20 years.
All right, Tom, today's one of those days when I wish I was on surveillance with you, not just because you have Max Kettner, but also because ECB decision day is when John Farrell really shines. Tom Keene, thanks very much. Let's take a look at what else we're watching. I am focused on ECB. I will be watching the Farrell Leinz Keene coverage today of this decision because, Tom McKenzie, it's really a coin toss between 25 basis points or 50 basis points. Now there's something for the first time in 11 years really on the line.
Yeah, remarkable, isn't it? Do they front load 50 basis points? That would be a big call from the ECB, or do they stick with that guidance of 25 basis points? I'm focused on what's happening in China, the property crisis. It continues to evolve. Look, China Beige Book says this isn't systemic, but it's going to be a hit to growth. You've got $69 billion worth of property, which has halted in terms of the construction, and you've seen essentially a mortgage payment strike. That is remarkable, never been seen in China. That is a problem for policymakers there and a potential significant hit to growth.
All right, very fascinating stuff there. The Chinese perspective added into the total focus on Europe that we've got. That's it for early edition. But don't worry, Bloomberg Surveillance, the original, is up next. Tom Keene, John Farrow, and Kailey Leinz taking you through the next 3 hours, along with an ECB decision. Max Kettner will join them, as well as Ed Morris from Citi. This is Bloomberg.